All right, I'm Michael Hartzman. Today is Tuesday, January 20th, 2026, and I'm on as always with my partner Dominick Tavella. It's chilly in Florida, Dom. It's chillier here, but how are you?
I do find it, and thanks, Mike. But I do find it ironic that I'm in Florida wearing a sweater and you're in New York not. But that's because I think you have heat up there, and it's a rare commodity down here.
Yes, exactly. I'm in my heated home. Thank goodness for small favors. But look, we have a lot to talk about. So let me do the numbers real quick, and I guess they're a moot point at this point. But so far for the year, Dom, the S&P started through Friday, in okay shape, up 1.5%. No one would complain about that. The Dow was up almost 3%, 2.74, and the Nasdaq was actually the laggard so far year to date, up only 1.19%. But all that got thrown out the window today. You and I talked on the last two shows about headline risk, about things bubbling out of Washington, which are unusual to say the least. Disruptive would be the obvious statement, and here we are with Trump threatening to take over Greenland, either in a friendly way, be given to us, or by force. NATO is not crazy about that. Europe is not crazy about that. I think Russia and China are thrilled about that. And the market, as we know, if it hates anything, it hates uncertainty. And that was a mouthful. So I turn it over to you.
Yeah, boy, Mike, I'm sitting here thinking about last week's podcast that you and I did, and how so I think we spent quite a bit of time talking about headline risk, right? So the two arguments here, one is the economic cycle we're in, what does the economy look like, versus, hey, when do we get the next tweet? When do we get the next headline announcement? And what does that do to the markets? And I think I might be wrong, Mike. You can correct me, but I think we even mentioned we might be raising a little cash just to kind of be a little bit proactive and be a little safe, which we did. But boy, we woke up. I think it started on Friday, and we woke up this morning to a market that said, "Oh boy, I don't want any of this. I don't want to deal with more tariffs and potentially conflict with our NATO allies." And we had a pretty decent pullback in the markets, and we'll see what happens from here. But not surprising, the markets did not like to hear the latest announcement, commentary from this administration regarding what they're thinking about Greenland and the NATO alliance. It was bad news.
I was on the phone this morning with a client, and we were talking about this, and he summed it up better than I could. And I told him I was going to steal his line for the podcast tonight, because I wake up every morning and I say to myself, "What now?" And it's exhausting. Whether you're an investor, financial advisor, an economist, it's just exhausting.
You know what, Mike, I had a very similar conversation with a client. In fact, in this particular case, the client said to me, "Aren't you exhausted?" And look, we don't have a right to complain at all. We have a great life. We have a great company. We manage a crazy amount of client assets and responsible for that. I always say we chose this. Nobody made us do it, right, Mike? And we do it very gratefully and humbly. But yeah, it's exhausting because at the end of the day, we're supposed to look at the economic cycle. We have to look at where corporate America is, where the US consumer is, the global economic environment, and make investment decisions. And then we have somebody basically throwing in, I'm trying to think of a polite way to say this, Mike. You can help me if you want to.
Well, I'm going to steal your line, throwing in an unforced error.
Unforced error, right?
That's your line.
I don't want this to be a complete commentary on the policies that are being thrown out there. but we've stated, and I think quite accurately, and love for somebody to correct me if I'm wrong, but I think President Trump would have gotten substantially most of what he would want anyway out of this relationship with Greenland and of course the NATO allies without the drama without the drama. So I don't know what the end game is, and I'm sure it'll come soon enough. And maybe this, like the past headlines, will just go away. I just don't know if it takes a day or a month, right, Mike? But I think it will resolve itself. But we're going to have some drama in the meantime.
Yeah, and look, and I'll just make one comment, and it is going to sound political, but him sending a note to the prime minister of Norway, basically implying you didn't give me the Nobel Peace Prize, therefore I'm going to take Greenland, does nothing except weaken his case. When I first saw that, Dom, I swear to God, I thought it was parody, but it's real. It happened, and it's stuff like that that's more frustrating than anything else because
Yeah,
it's
Mike,
not even
the
serious.
comment, which was meant to be private, by the way, right? And it was so shocking that I think somehow it leaked out. But I think it was meant to be sarcastic. But who cares? It's not what a presidential approach should be to this particular issue, right? I think Lord knows many a president has been caught on a hot mic and saying something that was meant to be kept private. But boy, this was a little much.
Yeah, I think best case scenario was sarcastic. Worst case scenario, it was real. But we'll let Fox News and CNN and MSNBC fight over that. That's not our job.
Yeah, our job at the end of the day is to keep people focused on their long-term plan. And I remind everybody that last April, April 8th was the bottom of the market last year. We had a pretty significant correction. We had a 20% pullback in the major indices. And the scary part of that is, Mike, and I'd love for you to jump in on this one. Many, not our clients, but many people jumped out. Fear, panic, get me out. I can't take the pain. And then the market rebounded and had a terrific positive year. But a lot of people got out at the 20% bottom, not the 20% top,
Yeah,
right? 40% swing from bottom to top, Mike. And they
and
missed it. They completely missed it because they panicked.
and I don't disagree. And I'll quote, and every show I get to quote Yogi Berra makes me happy. And this is probably going to be deja vu all over again. Our guest this evening, Howard Yaruss, the economist and author and professor at NYU, may feel a little differently. I'm curious what he's going to say, but I tend to agree with you that this might be a revision of what happened last year. In my opinion, another unforced error, the way the messaging was done. No, I mean, the tariffs necessarily seem to be working, but the messaging was chaotic. Um, and I think we have to remember what you just alluded to is the fundamentals of the economy are basically fine, right? That's the main point is the economy is not deteriorating at the moment.
And Mike, just to state the obvious, I'm sorry. So why are the markets behaving that way? I.e., today the averages were down 1.5 to 2% in one day. Why are they behaving this way? Because the possibility does exist that it does go bad. Our thinking is that it won't. I thinking it that this is just the way this administration negotiates, whether we like it or not. But there's certainly, and we certainly have to acknowledge the possibility that it doesn't work out in the end, no matter how confident we might be that it does. It might not, right? Accidents do happen. Unintended consequences do happen.
Well, I think the good news for us is unlike many other presidents who have preceded Trump. Trump is well aware of what the stock market does, and Trump likes to own the stock market, especially when it does well. So I think at the end of the day, um, he doesn't want to intentionally crash the stock market. That's where the expression last year, came the taco trade. Trump always chickens out. Obviously, it's derogatory towards him, and I'm sure he doesn't want to own that. But at the end of the day, whether you call it smart negotiating or him backpedaling or chaos, whatever the case may be, you're probably right. There'll probably be some type of agreement. I think you said it this morning on our morning call with our advisors. Some type of 100-year lease, some way to give this guy a win without cracking open the NATO alliance, which would be a disaster and would not be treated remotely favorable by the market, Dominic.
No, and maybe if anything gives us a little confidence, just kind of giving you a thumbs up on what you said, Mike, it's that selfishly, we do have a midterm election coming in November. A lot is at stake. And I have to believe, common sense, logic, whatever you want to call it, they do not want to put themselves, the Republican Party does not want to put themselves where they just lose both sides of Congress, right? So I think selfishly, there'll be a focus to resolving it sooner than later. And in the end, hopefully good for us, because the alternative would really be quite traumatic.
Yeah, I know on many, many levels. So let's take a break. And when we come back, Dom, we do have a returning guest, a friend of the show, Howard Yaruss. He was on, I think, in the middle or late this fall of last year. He's the author of a book, Understandable Economics, because understanding our economy is easier than you think and more important than you know. And man, is that timely tonight? In addition to being an author, as I said before, he is an economist, he is a professor. So we look forward to his input and his insight. And we'll be right back with Howard Yaruss, professor at NYU. All right, I'm Michael Hartzman, back with my partner Dominick Tavella and our guest this evening, Howard Yaruss, professor and economist, a professor at NYU, economist at large, and an author of the book, Understandable Economics, because understanding our economy is easier than you think and more important than you know. So let me start right there. On a night like tonight, is it really easier than you think, Howard?
Yes, it is. As I always say, most Americans don't take a course in economics, and the minority who do take a course that is filled with formulas and jargon and all sorts of sort of absurd technical assumptions. That's really a way to alienate people from trying to understand the economy. Sometimes it's not that simple, but if you have some foundational information like what the Fed does, what money is, and you use your common sense and you look closely at the real world, you can figure it out. You don't need all the math. The math is good for figuring out precise relationships. In your business, the math is important to figure out exactly where you should invest to get the best possible prediction on what returns will be. But if you just want to understand the fundamental relationships, you don't need all the math. So yes, I do believe it is a lot easier than most people think.
So Howard, I usually like to start with like kind of an easy question just to kind of get us all in a mood, but maybe one that's a little bit more deep. We've watched the price of gold go through the roof, and literally correlated right to it. Central banks around the world now hold the least amount of U.S. government bonds in history, and they own the most amount of gold. They have obviously sold off treasuries. They don't want to hold them anymore and bought gold. So, what are the implications of that? What does that affect our economy?
Yes, the amount that the US government spends on interest has soared. I'll tell you, when I wrote the first edition of the book, the hardcover version that came out in 2022, I don't remember the exact figure, but the annual amount of interest the US government paid was around 300 billion. It's now approaching 1 trillion. That's in the 3 years since the original hardcover came out. So that's a radical increase. That's a tripling of what the federal government is having to spend on interest. And the future looks like it's going to increase exponentially as well. So that's a real impact to Americans and what their government can do for them.
And
So
what does that do for who? I'm sorry, Mike, just what does that do to this idea that foreigners do not want to hold our bonds?
It's very interesting. If you look at this is also, I happen to know the statistics because I wrote the original book in 2022 and I updated it and it came out, the paperback came out this summer. So the percentage of our debt owned by foreigners when I wrote the original book in 2022 was roughly a third. When I wrote the book, revised the book a couple of years later, it was down to a quarter and it's continually dropping. What does that mean for all of us? It means that it puts upward pressure on interest rates as the market for US government debt shrinks. Foreigners are less and less interested in holding our debt. So the US government just has to offer a higher rate to entice more Americans or more whomever to hold the debt. But yes, they're not as alluring. Our U.S. debt is not as alluring as it historically has been.
Thank you.
I'm going to follow up on that because Tom, that's exactly the question I was going to ask Howard. So I guess my follow up to that, and it's on a similar vein, is that because of the current leadership and the chaos, or however whatever adjective you want to use, versus the actual quality of our treasury bonds and notes? Because the investment is safe, and the investment is probably still the safest investment on the world. So why wouldn't foreign companies want to own our paper if it's the safest thing they could own?
Well, again, there's no uniform reason because it's foreign companies, foreign individuals, and foreign governments. So, and within those groups, there are many players. But when you say it's perfectly safe, we've gone to the brink on a default on U.S. government debt. It's not a question of ability; it's a question of political will. And there's no guarantee. There's no one that can guarantee that the political will be there to not default on the government debt. So it's not quite as risk-free as everyone assumes. So that's point number one. So I think that's one thing. I think there's also the president administration is creating a lot of ill will throughout the world. So one reaction, aside from the economic merits of U.S. debt, is to just buy less U.S. debt. It's a way of voting with your dollars, with your money, to show that you don't like current American policies. So I think, again, number one is that it's not as risk-free as everyone assumes. And two, it's way for people to vote with their money to show that they don't like what the current administration is doing.
And
But
Howard, let me just jump there.
net,
Howard, Don, I'll
go
give it to
ahead,
you in 1 second.
please.
Well, before I give my compliance officer an aneurysm, I don't think I said perfectly safe or 100% guaranteed. I was implying it's the safest investment, one of the safest investments you could buy compared to other currencies. So I just want to make that clear. You know, I would never imply that anything is perfectly safe. And again, I just wanted to make that point so my compliance officer who's going to listen to this in 2 days.
There are no guarantees in life.
Exactly.
All investors should know that.
Back to you, Dom.
Just underlining what we're all saying. Net end result, though, is if there is less demand, especially by foreigners, for our debt, the net result is higher interest rates, which means our budget deficits are even higher. Our costs of operating the country is even higher.
Yes, and the budget deficits at this point are structural. There doesn't seem to be, no matter how well the economy is doing, there doesn't seem to be any end in sight. So this is a problem that, to use a word that's overused all the time, but in this case, it makes sense. It's just not sustainable.
So go ahead, Mike. I keep interrupting you.
Go ahead.
I just want to make the point, an analogy to the housing crisis in 2008. Housing prices were going up faster than incomes. That can happen for a few years, but at some point, because housing is something that most Americans own and use, that is by definition not sustainable. So the question is when and not if the bubble will burst. So again, it's something that can't possibly go on forever. Well, this is pretty obvious, is going to stop at some point. And the question is, when does the U.S. have to reckon with this structural deficit that can't continue the way it is?
So on that note, we look at tax revenues 5 years ago compared to today, they're substantially higher, right? So we're taking in way more money than we were 5 years ago, just as an example. But we're also spending way more money than we were 5 years ago. Yeah. So it's clear that it's a spending problem. Would you agree?
Well,
loaded question.
That's a political decision. There's the money coming in, the money going out. In theory, you can even it out either way. So objectively, you can say it's a spending problem or an income problem. Either way, it could be both. Either way, it's a gap that has to be filled.
Oh, we're just to switch gears. You know, as you and Dominic were speaking, I was imagining us sitting in your class. But I'm assuming the students in your class don't look like us. They look like our children or grandchildren, and their mindset is completely different. And I know in your book you covered the whole Occupy Wall Street, which I guess was now about 15, 20 years ago. Do you, when you're talking to young people today and trying to describe the economy, is it the same conversation you were having with your students 30 years ago? How has it changed? How do you have to, change your narrative for this audience, or is it still economics 101?
I think students today, and I hope no one from NYU is listening, the NYU's administration is listening to this, are less informed than they used to be. To the extent that they think about these issues, they think capitalism is something bad. And I give a full-throated defense of capitalism in the beginning of the book. I think they're mistaking some abuses and some excesses for a problem with the whole system. The system's not the problem. The problem is that we're not regulating it quite as well as maybe we should. But there's antipathy towards capitalism. There's a lot of alienation. There's a lot of even anger at what they feel is they're facing diminished prospects. So they're not approaching this with the idealism that I had when I was going through college and law school, that there were so many opportunities available to me. And it's just what do I think would be the most fulfilling? To have it's a very different perspective from the perspective I had when I was going from school. It's unfortunate. It's sad.
But
You interact with younger people as well. Maybe not as extensively as I do. Do you think that that characterization is accurate for the people that you interact with?
You know what? Yeah, from the point of view, when I talk to the children of my clients,
Mm-hmm.
they are way more risk adverse than their parents. And they have no concept of their time horizon or this long runway. They're afraid of losing money. They don't understand how it works. They think the system is rigged. And yeah,
Mm-hmm.
we spend a lot of time educating them, and the whole idea, and I always say to them, if you want to be more conservative, then we'll do that, because I'd rather you make less money than you wind up losing money and you don't invest for the next 10 or 15 years. That is the biggest way I could harm your investment future. So I spend less time trying to convince them that they should be a little more aggressive because they're young, and just try to get them to break that egg open a little bit and take some risk, and then we can revisit it down the road when they've had some success.
I'll speculate the reason that they're more conservative is they have the bias that I just discussed.
Yes.
That they
Yes.
think there's less opportunity out there. They can never replicate what their parents achieved, because let's face it, the kids you deal with are the fortunate ones whose parents have a good amount of assets, and they're just afraid they can never replicate that. Whereas I think a generation or two ago, the world was your oyster. There's so much opportunity out there. If you failed at one thing, you'll succeed at something else. I think they see this more as a zero-sum game, and they were fortunate enough to be born into a family that was on the winning end of the stick, and they want to do everything they can to preserve it, because it would be very hard to replicate that.
1,000%.
So I want to switch gears, maybe the glass half full. This same group of people, and I was trying to look it up real quick, and I apologize. I have it somewhere. I'm just not sure how quickly I can get my hands on it. But this group of people is scheduled over the next 10, 20 years to inherit the largest amount of wealth in the history of this country. They literally will inherit trillions of dollars. So maybe in a glass half full discussion, Howard, do you know the number off the top of your head? Or
they say $70 trillion from one generation, from one whole generation, which is an extraordinary sum of money.
So, and both myself and Michael are seeing this in our practice, where couples that I would say are maybe mid-50s, and I don't want to use the word struggling, but trying to pay their bills and educate their children, and God forbid, but mom or dad passes away, and next thing you know, they inherit $1 million or $3 million or $5 million. Like, oh my God, I never knew mom and dad even had this kind of money. What are the implications going forward for this group in our economy when this wealth transfers over these next 10 years or so?
I think it's great for the people who are getting it, but for the people on the other side of the coin who aren't inheriting, it becomes more and more difficult for them. And some scholar of ancient Rome once said he could sum up why Rome fell in one short sentence: too few had too much. And I think when you have too much of an imbalance, I think it creates social instability and a lot of resentment. So I think there's a concern with that. I'm not saying I have the answers. I'm just pointing out that there are the people who are benefiting very significantly from this system, and then there are the people sort of left out in the cold, and that can result in a bit of resentment and sort of fray the social network.
Well, Howard, we're also seeing that on just the pure wealth effect of the stock market in general.
It's
right?
Great. I saw an estimate. I don't know how true it is, that the top 10% accounts for 50% of all spending at this point, because of the wealth effect being very strong now, with the stock market doing as well as it has.
Well, yeah. I mean, I guess that was my point in bringing it up. That our clients complain, how they go to BJ's or it's a Price Club, and it costs 30-40% more, but they're still buying whatever they need to buy. And and I think when the media talks about affordability, and the Republicans say, well, there's nothing to see here, just like the Democrats did the same thing a year and a half ago, which I think lost them the election. That's because just 30 or 40% of the population, Dom and I talk about this all the time, they never get to benefit. You just alluded to that. So I think that is also part of the problem, is that the economy is kind of been split in half. And I'm not a socialist. I own a broker-dealer. We own an investment company. But the economy is clearly bifurcated between the haves and the have-nots.
Yeah, and that's what I was talking about, opportunity. I think if you look at the unemployment rate is good, actually. But if you look at people graduating from college, getting their first job, that has turned into something very difficult. Someone once said, why doesn't the pendulum ever land in the middle? I remember when I was a kid, George McGovern was running for president. I remember someone saying he's more concerned with the unemployed than with the employed. And I think right now there's this, the pendulum is all the way on one side, and hopefully it'll move back to the center. But my fear is that there's going to be a lunge in the other direction. You saw that in New York City's recent mayoral election. So again, I'm always arguing for the center.
You know what? I hope our producer is listening to us. That let's just do it now. We'll take the break a little longer if we have to. Let's talk about Mom Dami and our new mayor, because when we had you on in the middle of last year or fall of last year, it was before the election. We had a feeling he might be elected. He was. I know you live in New York City. As far as I can tell, New York City has not sunk to the bottom of the Atlantic Ocean.
It might have frozen, but it hasn't sunk.
So has the shock of his election? That's what's going to happen next, right? We talked about it last time. He can't give away free bus rides. It's just not in his ability to do that, right? So what happens now? When does he? I know the excitement's still there, but what do you expect of him, and what do you expect the expectations are of him?
Let's think about his powers. He has the power to remove the carriage horses from Central Park. He has the power to put in extra bike lanes. He has maybe some influence over the schools and policing, although he hasn't exercised any yet. Let's think about the powers of the president: the economy, war, peace, my life, your life. People need to get a grip. He just doesn't have that much power. He doesn't control the tax rate. He doesn't control tax collections. Again, the carriage horses may be removed from Senate. They've been talking about that this is a controversial topic for 8 years. Yes, he may put in some more bike lanes than some people who own cars want. It's in the grand scheme of things, I'd say it's inconsequential.
And some might perceive this either good news or bad news. I'm gonna save the commentary on that. But at the end of the day, he will not be able to fulfill a significant number of the promises he made.
Yes, and I may say,
is that fair to say, Howard?
Yes, that's totally fair to say. And maybe he will get free buses, but is that really the end of New York City if buses become free? If somehow they figure out how to come up with the $600 million a year to make buses free, is that something that is going to make New York City unlivable? Obviously not. It's very overblown. So yes, I don't see it as anything terribly consequential.
And just for the sake of saying it out loud, if we could get free buses, especially for the people that ride buses, that's not your average millionaire. There might be a couple that do it, but I wouldn't say your average millionaire. Those are hardworking blue collar people. Why not be able to give them free bus rides? But how do we pay for it? That's always the problem.
Yes.
How do we pay?
Well, actually, yours truly, I wrote an op-ed for the Daily News years ago, and I actually updated the argument, and it appeared in Vital City, which is a publication that's here in New York City, arguing that you could pay not only for free buses but for all free mass transit by charging for street parking. Again, it's a political decision. I'm not advocating it. If you charge $3.50 per day for on-street parking, you can have it comes out to $6 billion a year. I did the math. I majored in math as an undergrad. You can actually eliminate fare bumps. But my point is that that's not Mandami's plan. He's not even thinking about that, which is a problem, because this is a problem, and I hate to compare. People wince when I compare Trump and Mandami, but here goes. Making promises that just that won't be kept. It causes people to be disillusioned with politics. And Mandami to say we're going to get free childcare, which would cost $6 billion a year, which happens to be the complete budget of the NYPD, is irresponsible if there's no way to fund it. Similarly with the free buses, he could have said, yeah, we're going to bump up the fees on street parking, but he didn't. So there's just, it's just a pie in the sky idea. And that's what Trump did also, about prices will drop on day one and peace is going to break out all over. And it causes disillusion. And I think to finish this whole thought, voters need to do a better job. They need to listen to what people are saying and say, how are you going to do that? Not just, oh, sounds good, let me vote for you.
Well, look, Mandami and Trump wouldn't be the first two politicians who, said things they had no intention or had no ability to fulfill. It just seems part of the job description of being a politician, unfortunately.
Yeah, but I think it's been ratcheted up. I think the promises have become more and more extreme. It's one thing to say he's going to improve the economy or somewhat, or push or reduce inflation, but to say prices are going to start dropping on day one, it's a question of how much you push the truth. And I think it's being pushed to breaking point at this point.
That's fair. Listen, let's take a break right there. And then when we come back, Howard, what I want to explore a little bit, you said it on the pre-show, Dominic and I, mentioned it briefly, the whole theory of black swans and, things coming out of the sky that no one was anticipating. And I think we might be maybe going through one of those right now. So let's take a break here. When we come back, we'll pick Howard's brains about what's happening with this administration, with Greenland, Venezuela, Iran. There's a lot of cross currents right now. So we'll be right back with Howard Yaruss, professor at NYU, economist and author. All right, I'm Michael Hartzman, back with my partner Dominick Tavella, and our guest this evening, Howard Yaruss, author, economist, and professor at NYU. Um, Howard, Dom and I mentioned it briefly. You mentioned it before the show. The whole idea of the black swan theory, and the expression came from a book that was written probably close to 20 years ago. The premise was that what really always winds hitting you up in the back of the head is what you never saw coming. And the author's premise, I think, at the time was, just because you don't see a black swan doesn't mean they don't exist, and doesn't mean they can't happen. And the tariff thing a year ago, Trump said he was going to put on tariffs. So I don't know if that was a black swan, because the messaging was not great, and that's what caused the hysteria. But Trump said he was going to do these tariffs. I don't think anyone had a pandemic on their bingo card, 9/11 on their bingo card, or certainly us possibly invading a NATO nation, right? So let's, at the moment, put this whole Greenland thing as a black swan. Would you agree kind of with that assessment?
You know what? There's been so many potential black swans on the horizon with Trump. It's sort of like the boy who cried wolf. Um, we mentioned this term before, taco, the Trump always chickens out. And I think Trump closely watches the stock market. And I think if he may say crazy things, and this may be a way that works in real estate negotiations in New York City. But in any event, I don't see him following through on anything that would really rock the world and crash the world economy. But there's one caveat. I think the tariffs you saw, he pulled back on that. I think he'll similarly pull back on this Greenland thing and come up with some kind of compromise. But here's the one thing that does worry me: the black swan that is on the horizon that gives me concern. The November election. I think if he sees Congress flipping, he may be induced to forget the stock market, to forget all these constraints, and do what he thinks he needs to do to save his neck. Because if the Congress flips to Democrat, he's in trouble. So that's the one black swan that I think is potentially really consequential.
And maybe I'm just going to tail off that comment by saying sometimes it's not necessarily an entirely black swan event. But you just brought up again our national debt and the amount of interest we pay on that. The unintended consequence of his actions is that we have this international community that doesn't want to buy our bonds and therefore pushing interest rates higher than what President Trump wants, right? We all know he wants lower rates, but his unintended consequences of his actions, he's actually gotten higher rates.
Yes, I think I was focusing on black swans as a result of his boasting, as a result of his threats. There are some systematic problems. I could two of them. You came up with one very good one: the interest payments. They're becoming, again, as I mentioned before, they've tripled in the last 2 or 3 years since I wrote the original book. That's just not sustainable. That has to end at some point. As one economist said, something that has to end will end. The other thing is that the cryptocurrencies. There's now over $3 trillion of cryptocurrencies out there, and there's literally trillions of dollars, trillions being invested in AI infrastructure and the tech infrastructure that runs the AI and is essential to the tech industry. I don't know how this is going to be earned back. It has to be earned back, and if it's not, you're going to start seeing defaults, and that could create a domino effect. So I think those are two major structural problems that are going to have to be addressed at some point.
And just so I just want to clarify one thing. When you talk about the midterm elections, and if it's not going his way, were you kind of thinking of a kind of a wag the dog scenario where he invents a crisis, or were you thinking more he would try to not have midterm elections, because he's thrown that out there as well?
Yeah, I unfortunately I have no idea. Maybe I'd be invited on more podcasts and radio shows if I pontificated. I noticed that people who make all sorts of wild predictions get the most invitations, but I'll be honest, I have no idea. But I do see that. I do see him backing off anything that is going to really rattle the international economy, like the tariffs. I totally expect that with Greenland. I could very easily be wrong, but I do expect that. But I think when it comes to the election, because his own neck is on the line, I don't know if he'd back off on that one. And what he would do in that case, I don't know. I have no idea. It could be a wag the dog situation. It could be some kind of insurrection act situation. I just don't know. But that's one thing from his policies that scares me in terms of a black swan event.
So you're clearly an economist, and from our side of the fence, we're supposed to look at the economy and manage portfolios. How do you factor, can you factor these unknowns, these headlines into our modeling? You on the economy, us on portfolios.
That's such an interesting question. I have an answer for that that I gave right after 9/11. I was general counsel of one of the largest guarantors of debt in the world. We guaranteed municipal debt throughout the United States. And the board of my company asked me, well, New York City was just hit. How do we protect ourselves? And I said, we have to continue to do business with the world as we know it. We can't protect our business against a fundamental change in the way the world works. And you just have to go ahead. And if the world fundamentally change, you have to hope for the best and adjust to it. I don't think you can prepare for something like a major macroeconomic meltdown. I don't see how you do that. I think you have to do your job with the world that you know and do the best. And again, hope for the best. And if the world fundamentally changes, you have to be nimble and change quickly. That said, personally, I made a big investment in gold a few months ago, so we'll leave it at that.
So okay, that's a good springboard for my next question for you. Dom and I have been saying for a while, Howard, that in spite of all the headline risk and a lot of agita that gets caused, on a daily basis, the fundamentals of the economy are not terrible. Would
Mm-hmm.
you agree with that? Would you push back on that? Like, forget the drama. If you just looked at the economy, what would you give it on a score of 1 to 10?
I would give it. I think the economy is fine. I would give it a B. I agree with you.
So, and that's a difficult part, right, Howard, is that if we look at, I just had a conversation today, hey, this is not 30-minute money. It might be 3-year money or 30-year money or somewhere in between. You can't let today's headline scare you into action when we might not need these resources for 3, 5, 10, 20 years down the road. So, but it is hard to just keep your eye on the ball sometimes.
Yes, and the fact is that if you look at the past, people who've kept their money in the market have done quite well. That's just a fact. Whether that will continue to be true, I hope.
We
You know
hope.
what, Howard? Look, I can probably speak for the two of us. Dom and I were solid B students in college, and look, got us this far. So, if the economy's a B, we'll take a good solid B. And we agree with you, right? We look at the economy all the time, and it's just not deteriorating. It just seems to be moving along.
Yeah, but there's that line about bankruptcy. How did you go bankrupt? Well, it was a very slow process and then all at once. And so, again, that's my fear. The fear with a black swan or more generally a bubble is that boom, it hits you on the side and it all falls apart pretty quickly.
Can we come back to this idea you brought up earlier? We read it all the time, a K economy. What the heck is a K economy?
It's something we've already talked about is how the well-off are doing particularly well and the not so well-off are doing particularly poorly. It's a bifurcated economy.
And we can safely say it's the half of the people of the have-nots that literally are struggling every day.
I don't know if it's half. I think some people claim it's more like 80%. But yes, it's the bottom part of the K is bigger than the top part. But yes, it's a bifurcated economy where the people doing well are doing really well. If you I recently went very personal on a vacation in Peru, and all the upscale places were packed. It was impossible to get a reservation anywhere. So I think that the people who are doing well are doing very well, and that's throughout the world. The reason I mentioned Peru is because only about a third of the tourists were American, and again, the upscale places are doing extremely well.
Yeah, and so getting back what we talked about on the first segment about your students, you know, capitalism, I still believe, is the greatest economic system that there is, and capitalism works. It's not perfect, but based on what you just said about the bottom half being a much larger portion, do you have a hard time convincing your students and people in general that capitalism is still a pretty great system?
Um, Frankly, most of my students at NYU are like the children of your clients. So they're people who know they've benefited enormously from the system. So I don't have a hard time convincing them of that, actually.
But and listen, I'm as big a fan of capitalism as all of you. But capitalism, and I kind of remember this from my college days, capitalism is not nice. It is the strong eat the weak, and the stronger get stronger, and the weaker get weaker, right? Companies that don't do well or survive don't survive, right? They file for bankruptcy, and companies that do their job well get bigger. So it's
Exactly. And that's what we have a government for. It's the government to take the rough edges off capitalism. That's the whole point of the government. The government has to protect against negative externalities, corporations that pollute or create other problems. The government has to prevent great concentrations of wealth. Yes, you should do well if you're successful, but you need to give back to help keep the country going and provide the infrastructure that allowed you to do so well. That's the role of the government. And for the government, and it started with Ronald Reagan in 1980. The government is the problem. And I think, again, why doesn't the pendulum ever land in the middle? He was right at the time. There needed to be more latitude given to the private sector. But I think where we are now, it's a little too far to the other side.
Howard, with the few minutes we have left, I'm going to give you an opportunity to talk about your book a little bit. Just again, it's called Understandable Economics, because understanding our economy is easier than you think and more important than you know. I know it just came out in paperback. So, number one, tell our listeners where to get your book. And number two, why could they benefit by reading your book?
Well, first of all, the book is available pretty much wherever books are sold, certainly on Amazon. But if you want to buy it from your local bookstore, I encourage you to do that. And if they don't have it, they can easily get it. So the book is available all over. I also have a website where you can learn more about the book. It's howardyarus.com. The book was written. Why is the book important? Because economics, contrary to what people may have learned in a college course, is not about math. It's not about formulas. It's not about graphs. It's about values. There's no objectively right answer to what the tax rate should be, how much wealthy people should contribute to the common good. And so it's about values, it's about judgments. And if you don't get involved in those decisions, if people generally are ignorant of what's going on, those decisions are going to be made by someone else. And they may make decisions that you find very problematic. So the only way we're going to have a productive and efficient country that people feel good about is if they assert their own views through the electoral system or through whatever way they can. And so the only way you could do that in an effective way is to understand what's going on and have an informed opinion. And the goal of the book is to help people do that.
Dom, why'd you take the last word?
Um, maybe just give you one last opportunity to talk, literally a minute, but how do we get capitalism to work better? You talked about government, but what's some specific ideas would you go, this is what we should be thinking about, this is what we should be talking about?
Two easy ones: taxes and antitrust. I think the economy has been really monopolized to a large extent. Retail with Amazon, transportation with Uber. Wherever you look, there's incredible consolidation. So I think there is a need for the government to be more involved in this market power that is being usurped by a few companies. And the second thing is tax. It's common knowledge that there are billionaires who literally pay nothing in tax. They live off loans, and then when they leave their assets to their heirs, they get a stepped up basis. No tax is ever paid. That's just something that has to be ended. That's just not there. Whatever you, I'm not a socialist, but whatever you think about, there's a certain cost to maintaining our government, to maintaining our country, roads, schools, all sorts of infrastructure. The wealthy should pay. I would say fair share, but I could say objectively, you have to agree they should pay some share. And so, yes, I think the tax system needs to be looked at. I think the antitrust system needs to be looked at. And I think I would start there.
I'd love to continue that part of the conversation. And so I look forward to the next time. We'd love to have that conversation.
Yeah. Oh, that'd be great.
You know what? I was just going to say, Howard, we wanted to have you back because your common sense approach to all of this and your calming effect, and you certainly didn't let us down. So thank you for making the time and rejoining us this evening.
Oh, thank you so much for having me. I really enjoyed it.
Thank you. And Dominic and I will be back next time with a new edition of the Lebenthal Report. Have a good night, everybody.
Good night, all.
Good night.